stop. Please stop.
Can I tell you something? Damn, I love that music. And it's Friday. What do they call it when you're rocking like different wardrobe?
You're rocking a different wardrobe today.
Oh. Well, I got my
you were all knotted up today or yesterday, and today you're like in your Aaron Boone.
You never know what you're gonna get with Swizzle.
You're wearing
Friday,
what Aaron
November
Boone.
4th, by the way.
Yeah.
Now, what does this day mean? It's Friday. What does it mean to you? What does November 4th mean to you, Dan Nathan?
Not much.
No. Would be CNBC Melissa Lee's birthday today.
Oh.
So a market call shout out to Mel Lee. I am Guy Adami, by the way.
Yeah.
Again, sporting my Yankee shirt. Dan Nathan on the other side of the glass. And in a second, Carter Worth of Worth Charting will be joining us. Today's special episode of Market Call is sponsored by FactSet, financial data and analytics that are in fact powered by tomorrow. But since tomorrow's Saturday, maybe FactSet should be sponsored. It should be financial data and analytics powered by Monday, Tuesday.
All right. Listen, I'm taking over here,
now.
Guy. Hey, Guy, I'm taking over here. We got a hard out at 11:30 here.
Well,
We're gonna move this thing along.
We
got Carter Braxton Worth here. We've been spending a lot of time on the macro this week. We had the Fed meeting on Wednesday. That was kind of exciting here. We had the jobs data this morning. We're gonna bring in the big guns right here. Carter Braxton Worth of Worth Charting. We're gonna go over it. Carter, the market has a little bit of a different tune to it today. We had that massive reversal Wednesday afternoon. People, I think investors, strategists were hoping for some sort of pause, pivot, whatever you want to call it. Horrible downdraft. We had some follow through yesterday. Here we are. We get the data, okay? And Amanda made a great graphic here. Hot or not, but we're rallying here today. What's your take on this price action that we've seen this week? Because it's been a volatile week.
Yeah, I mean, I think the main message is that there's dispersion, and most notably, the Apple is down today. I mean, the king is down as the market is rallying. There are messages in all of this, but in aggregate, equities as an asset class are churning here, right? We have their June low as our reference. We breach that low. We ricocheted back above it, and we're basically just churning, backing and filling slightly above the June low. I think the burden of proof remains on the bulls. The bears have to point to nothing other than this is a very bad year for stocks and for bonds and most asset classes, and it's not going to be an easy fix.
So Guy Adami, on Friday, this morning, we had this data here. You and I had kind of posited the potential that Fed Chair Powell, the honorable Fed Chair Powell, when he made those continued hawkish comments on Wednesday afternoon in the presser that were immediately, they were kind of, I think he was misquoted initially here, okay? He probably had a good look on this data here. So we have gains of 261,000, greater than expected. But we did have the unemployment rate tick up here. So I guess the question is, why are we rallying today? Or was whatever negative sentiment that we had, was it kind of incorporated in what we saw Wednesday into Thursday?
The unemployment rate ticked up. I think it's as simple as that. I think whatever, machine generated buy or sell orders picked up on that. And that's what you're seeing here. So we'll see how it plays out. Carter, I think the fact that he brought up Apple right at the top is interesting because Apple is clearly struggling today. And again, below 140 for a stock that was 158 or a couple days ago is somewhat interesting. And I'd point out that for whatever reason, the energy market seems to be like what we're hearing as well. I think part of that is predicated on this potential for China to reopen, which is something we've been talking about here for a while.
Well, hold on a second, Guy Adami. If any of our Market Call listeners or viewers happen to watch or listen to On the Tape podcast, which dropped in your favorite podcast store this morning with our co-host Danny Moses, we also had his former partners, and these guys and love them, Carter. We had Vinny, had Vinny Daniel, and we had Porter Collins on also. Guy, literally to the day, and I was a bit glib about it. He said, "Listen, this China thing's gonna reopen here, and it has the potential to spark a massive rally in commodities." Obviously, Chinese equities are a little beaten up here, and we're seeing them rally a little bit. So kudos. I know you hate getting kudos, Guy. Kudos to you on that call here. But question to Guy, when you think of what Carter just said, the burden of proof being on the bulls, and you look at this S&P 500 chart, you look at that downtrend. I mean, you see where the 200-day is, and I obviously Carter looks at the 150-day. It's a bit lower here. You got to get over this week's highs to even be in the running to make a charge towards the moving average and the downtrend.
Yeah, look, I mean, the knee jerk on this, the market was indicated higher. The number came out, the market immediately went lower. Then I think the unemployment rate came out, and then the market went higher. So it's all predicated to me on that. I think this one's going to be short-lived. I did think we'd get up to 4,000, maybe overshoot. We got up to 39.25. I'm hard-pressed to believe, though, that given what we've heard over the last couple of days, that's in the cards. And I'm still in the belief, and Liz Young talked about this back in November of last year, the market changed. It went from being a buy the sell-off market to a sell the rally market. And I think that's where we still are. And we'll have a much different conversation at a certain point, but that has not changed in any way, shape, or form, in my opinion.
Yeah, well, I guess, listen, I mean, if we can't hold today's gains, it's going to get pretty nasty here, especially after that Wednesday reversal, Carter. But one thing that is reversing to the downside is the U.S. dollar. And so to me, obviously, that would be a huge tailwind, I think, to many U.S. multinationals, which have been basically warning about dollar strength for a while. You see that uptrend there. Do you think that we have a good chance of a continuation, maybe a retest of that uptrend, which would be about 109 in the Dixie?
Yeah. So the sort of the synchronized global trade of rates, basically not, let's just say, have rates gone lower? Not particularly, but they're not going higher, right? So we know that rates, the rate of ascent has abated. We know the dollar has also not going higher. It hasn't given much ground, but I'm in the camp that rates go lower, dollar goes lower, and ultimately stocks go lower.
All right. Well, so Guy and I are in that same camp here, and I just say it's interesting because if you think what the Fed did, they brought Fed funds to about 4%, right? But we know that this 2-year yield is up here at 4. I mean, this is remarkable, right? It's near 470. So, Guy, when you think about this, and you also in that camp too, and primarily because of lower growth, you think that the 10-year tops out pretty soon. It's to Carter's point, it's grinding a little bit. It's sitting right on that uptrend, man. And my trade, and again, I'll just keep saying it until I know I'm wrong right now, is the GOVT. I think we will have a sort of swoosh back to that 3.5, and that'll be that trade will work out. But we also need the dollar to kind of do the same. I just thoughts here because we do have yields holding firm on a day that the dollar has reversed kind of harshly.
Yeah, it's. I think part of the reason is you're probably seeing a sell-off on. Again, I'm just playing this for today. But the sell-off in bonds, in other words, yields hanging in there, is probably a lot of it predicated on the fact that the S&P is higher. So I think if the market were getting throttled today, you would actually see the bond market lower or yields lower in some flight to quality things. So I can explain that away. But if you want to take this from a pure macro standpoint, 10-year yields should not be here. 10-year yields, in my opinion, should be a lot lower. 2-year yields make sense. 10-year yields don't. And I think at a certain point, the market's going to figure that out. And to Carter's point, there will be people that think that is bullish equities and it might be in the short term, but it's not.
Yeah. Well, here, let's go to the single stocks here because today, again, I think Carter used the word, there's some dispersion that's going on right now. Look at some of these names. Amanda put together a graphic here of some stocks that are moving in big ways after earnings. If you look at this, I'm seeing Team, and I'm seeing Twilio and DraftKings and Gitlab. These stocks are getting absolutely murdered, okay? And they're falling off the charts on the bottom right here. And then on the other side of it, you see Block, DoorDash, Expedia, Starbucks. Now, these are more, I think, household sort of names if you think about it, and they're all up a lot here. Carter, what is that kind of saying to you here? We're getting towards the end of Q3 earnings, but we're still seeing some really big moves. And this is a week after last week where, the biggest moves we saw were in the biggest names. And for the most part, they were all to the downside. And Apple, to Guy's point before, has filled in the entire gap. That was the only one of the major tech stocks that actually gapped up after its earnings. And now it's much lower.
Right. I mean, the common circumstance for most of these that are really getting hit to the downside is they've been in long and protracted downtrends, down 40, 50, 70%. And yet that's the point of dispersion. You're getting every once in a while something that's also bombed out, like a DoorDash that's popping. the issue, once this is all cleared and earnings are almost done, is you don't really have catalyst on a day-to-day basis or catalyst going out to the end of the year. And so then that's why a lot of people think you get a year-end rally, because you know when the mouse away, the cat's away, the mouse can play.
Yeah.
So that people just run the market because the Fed is known, the earnings are out of the way, the CPI will be out of the way next week, election will be done. They'll say, now we'll just ramp this thing. Okay, but that's not an investment strategy or philosophy. It's just, okay, maybe.
Yeah. Hey, Guy, a name that, has shown some decent relative strength of late was Starbucks. They reported the stock's up nearly 10%. I'm just curious what your take was on the quarter. We know that obviously a lot of expected growth is outside the U.S. We know that there's issues as it relates to supply chains and commodity prices and the U.S. dollar. I mean, a lot of things that we've kind of been talking about on a macro level. But again, the stock actually has not made a new low since the summer, right? If you think about it, and I'd love to get Carter's take on the chart. But I was just curious what your thought was on the quarter and how the stock has reacted, because it's not a bad looking chart right here.
No. And I think Carter actually charted this a week or so ago, if I'm not mistaken. And, typically he has the arrows down if he thinks things are going lower. And this one, he had the arrow up, and it's been right. And I thought the quarter was fine. Starbucks does trade at a premium valuation. They probably deserve it. And the point that I made last night on the show was, what you have working for you, again, something we mentioned earlier in this show, if China would somehow sort of indicate they're going to reopen, that's going to really, I think, open the doors for Starbucks to go higher, because obviously so much of their growth is predicated on that. So I think this chart actually looks really good. I mean, I don't love the broader market, but I sort of think Starbucks can go higher from here.
For sure. I mean, it has all the elements of a bearish to bullish reversal. The key first is look where it bottoms. May 12th. Stock market made a new low on October 13th. So if you're curing and healing, and just like being sick, right, it takes time and price. The word developmental comes to mind. Starbucks has been curing and healing since May as the stock market got worse and worse. And now the earnings are out and the stock has popped. 150.
Dan, I'm sorry, Carter.
Shortly. Yep. No,
can we pull up a tweet or not, whatever, a comment from DJ Chapman at 11:11? Oddly enough, that's like when you make a wish. So here's my wish for you, DJ Chapman. If you ever type into any show that I'm in, Santa Claus rally, I'm going to ban you from this. I've never uttered that phrase in the 16 years, 46 years I've been on TV. You've never heard me say sell in May and go away, or all that bullshit that so many people say. So delete that and put something else in.
I think DJ Chapman's trying to get y'all tuned up, and he did a good job.
He succeeded.
He did do that. So DJ Chapman, you'll never be banned as long as you keep twerking guy like that. Okay. Carter, here's one that I took a shot on pre-earnings, had a small position in, and then I really averaged down after the results, and it was Nike. And you did not like it. You said there was nothing attractive to you about it pre-earnings, and you were really correct here. But let me ask you this. You used that term, and you did a great bit on Market Call. I think it was last week, where you brought a bunch of charts, and you used that expression, bearish to bullish reversal. And you gave us all of the reasons and the setups for them. And again, like to Guy's point, you said that about Starbucks. How does this thing turn in? You see the lines that I drew here. You see that resistance when it broke down on earnings. You see that 1 year downtrend here. Are we getting to an interesting technical level now?
Right. So the drop in gap on earnings was back there in October. It plunges to a new low. And yet, as bad as that was, that sort of, for now, took care of it, right? It never went lower and has recovered. The issue, as depicted in the lines as you've drawn them, is simple. There are purchases made between July and the day before earnings, and by definition, those purchases were somewhere between 100 and 115. July, August, September, into October. Definitionally, all purchases that were made, forget about sellers, were done at that range, 100 to 115. When a stock that you buy at 100 or 105 or 110 plunges to 80, 85, all you're thinking about more, oh my God. And then you're also thinking, well, should I dump it here? I could, or if I dump it here and it rallies back, now I've got two problems. I've missed it one way and I punted low. So what the concept of overhead supplies, it's very elemental and basic, is when you return to the scene of a crime, a level from which a stock dropped and gapped, memory kicks in. Those who did endure this nightmare, I bought it at 100, it went to 80, but I'm even now. And so supply comes from above, one. And then there's the opposite. Not people who bought poorly or are looking to be made whole, get out. People who bought well, dumb luck or brilliance at the low. When you buy something 85 and they flip the cards over and show you 100, wow, I should book that. That's what supply is. You're at a level of considerable supply.
Dan's so mad at me today. At 11:13, Eddie Trevino, who's clearly in on the joke, put forth the following comment. Take a look at this, Dan. I'm not even going to comment on this because
the cash on
Eddie
the sidelines. Oh man,
Eddie knows he's working. I mean, he's working me, man.
I think AD is getting all our viewers tuned up here to just kind of give it to you into the weekend here a little bit. Okay. I mean, listen, that's helpful on the Nike, and it'll be interesting to see, big gap today for a whole host of reasons. Let's see if we can get through there. I wanted to hit you on a name that, again, I think might have fit into your, bullet or bearish to bullish, but again, maybe it doesn't have all the tendencies. Look at this DoorDash, which is up today, Carter. This is a 2-year chart. The thing went public a couple years ago. There's probably nothing that great about it. It probably, felt kind of weak to you, but we have this gap. It's below, or it's just got above this, downtrend that's been in place since the spring when it's been, cut in more than half here. Thoughts on something like this? Is this worth taking a crack at?
Well, it's not like a Starbucks, right? So if the concept of bottoming out is time and price, this was basically on the bottom and just has popped today in response to news. And so while you can get a day-to-day follow through, you don't just take off and then go higher for weeks and months. And so if I perchance had bought before this news, I think I'd be trying to harvest gains. As to those who are not involved, looking when to get involved, I would expect some backing and filling, and then on sort of day 5, 6, end of next week, you could take a look.
Yeah. Hey, Guy, real quickly, the CEO of DoorDash was on with Andrew Ross Sorkin on Squawk and Friends this morning. And I thought he had a lot of interesting things to say about the service economy, about the consumer, about where the consumer, how they're focused on their spend as far as, DoorDash is obviously delivering a lot of food. Thoughts on this just fundamentally? Again, here was a massive market cap, right? When it went public, it was trading at a very extreme valuation. I think obviously valuations and consumer internet names and gig economy names and a lot of different, they obviously have gotten cratered here. When you see a story like this with the sort of guidance that the company gave and the stock kind of washed out, does it start to kind of pique your interest at all?
As a trade, absolutely. I mean, again, this falls to me. It's a similar trade, the Snap setup. And by the way, it's a similar trade as the Robinhood. They're different companies. I mean, Carter talks about this all the time. They have nothing to do with one another, but all the charts are very similar. And you can see a 40-50% rally in these names. Doesn't mean the companies are fixed, and it doesn't mean the companies are inexpensive, but it just means you're getting this relief rally off a considerably oversold condition. So yeah, for a trade, I like this. In the same way we talked about Robinhood a couple of weeks ago, and quite frankly, the same way you set up your Snap trade, it's all coming to fruition. So doesn't mean these things are fixed. It doesn't mean they're value stocks. It just means they're great trading vehicles. And that's what I look at this in terms of DoorDash.
Yeah, no, that makes sense to me. And I guess, if you were playing from the long side, where you stop it too at the recent lows. Carter, here's one though that reported. We talked about Block, which is the Square, having a big rally today. One of its competitors, PayPal, which is a name that, I bought in the spring. I was a little early. I had to kind of ride it down a little bit. And then it had this great, run in a decent quarter. And the stock showed pretty good relative strength. You could see it made a series of lower highs over the course of the summer. And then it just kind of fell out of bed recently. The results are out. The stock gap lower. It's trading near the highs of the day. Feels like it could make a bit of a spike bottom. I bought some today at 74, and really what I'd probably be playing for is a move back towards that downtrend that we drew since that gap in the spring. Does that seem like a decent trading idea here? Because again, if this thing were to go through today's lows, I'd probably be out of it. I'm going to use a tight stop on this. Just thoughts on something that had been showing decent relative strength, but then really kind of gave it up over the last couple months or so.
Right. First, putting in the context of Block, so Block is up, 20%. And yet what's so crazy is that Block is only back to where it was on Tuesday. I mean, that's the problem with weakness. When you're going down and down and down, you have a reprieve, a day where you bounce. I mean, that all it could do was undo the weakness of the precede. So you have a great print. Oh my gosh. And you get the headline say surging. Oh, how about returning to where you were 2 days before you screwed up? Meaning it's not that exciting. But PayPal, yeah, sure, you could speculate on that. And that's what it is. It's because there's no, not to say there's no technique, but I mean, we see the line, it's in a downtrend. Can it rally back a little bit? Is there momentum in the market? But that's just a trade. And I'm not saying just in the bad sense or good sense. It just has to be known or acknowledged for what it is. It's just, hey, let's speculate on this and maybe we get it right and maybe we get it wrong.
You heard what he said. He said no technique there. And listen, you and I have been doing market call together for now 2 years, and I think you could probably agree with him. There's very little technique, a lot of gut here.
I love what he says. I mean,
no, but
I'd love that.
But I will tell you this: back in the day, and I remember the trading in like 2002 when things were so bombed out and everybody wanted a bottom to happen. We were in like the 3rd year, right, of this bear market, and it felt excruciating. It was very similar. A lot of these SPAC names, a lot of these recent IPOs, these things are down 80%, and you're getting to valuation and you're getting to cash levels and you're getting to all this stuff where people just want to believe. And it was really a fun trading environment. And I think that maybe from here to the balance of the year and maybe into next year, it might be like that a little bit. So, getting some of these intraday reversals right and getting the follow through for a couple of days, that is a rewarding trading environment as long as you keep raising your stops to the downside. So I'm just curious, Guy, when you think about the PayPal, the relative underperformance right now versus Square, and they both reported, thoughts here. Like, do you like this thing as a trade setup?
It depends on how much volume we trade, and I'm trying to look at it right now in terms of PayPal. I mean, if you get today, for example, bear with me a second because I'm looking at it. So it's already traded how many shares today? It typically trades 13.5 million shares. So let's put here
23. 20, I'm looking at FactSet right here. 23.5 million shares.
All right.
Guys.
So if this were to trade, and it's going to trade over 50 million shares, which is going to be about 4.5 times normal volume. That to me is probably significant enough where. We didn't make a new 52-week low. I think the 52-week low is 67.5 or something. But, if you were to get a 50 million shares or north of that, you might be able to trade it against whatever today's low is, which I think is 71. And if you really want to be ambitious, 67.5. So that's how I would look at it. But again, to my earlier point, it doesn't mean the ills of PayPal have been fixed by any stretch of the imagination.
I'm with you, dog. All right. Well, here's the deal. So we just did like our little, our little Q&A period. We got to kind of pitch Carter and a bunch of stuff. We were kind of pumping our junk to him. Well, he brought some good. Yeah, we were pumping our junk. He brought some good stuff here. He brought some smart stuff. He brought a sector and a ratio chart. He wants to look at industrials here. And this one is a really, really interesting setup here, Carter. So talk to us a little bit about how you're thinking about the industrials. It's had a big run here. We've talked a lot about rotations, right? As some of the mega cap tech names have gotten killed, the money has found its way into other places. Give us to it. What are you seeing?
Yeah. So again, all that a ratio chart is, you take one thing, divide it by another, and one could say, well, who cares with that? What does that do? What it does, it ends up with a line, right? You plot that ratio, and if the line is rising, forget about the scale and the Y scale. It's the direction of the line. At any given moment, if that black line is rising, it means that industrials XLI is outperforming the SPY, and so what we have, just how far above the 150-day moving average we're getting a fairly extreme reading. This is over 5 years. If you look back, we have a longer term iteration of this. Basically, look at where we are in relation to the 150-day average in this chart. And then if you look at the next chart, what you'll see is how far back. Now that key level, right, is annotated. And then if we look even further back, what you'll see is, and then finally look at this last one with a line, and then we'll put it all together. So we are just in and of ourselves, we are as far above or below the 150 moving average at any other point except for the COVID low, where we plunged, where industrials were really underperforming the S&P. And now, and to some extent, it's an equal and opposite reaction. We're straight up, but we're straight up to a very difficult level. And this is what rotation is. As people, Apple's down today and Microsoft having a hard week, they're saying, well, maybe I could play some Caterpillar and some Boeing and some GE. But that move is getting crowded, and that's the problem.
Yeah, so let's take a look at some of the individual names because you brought them along here. And again, I love your description of the ratio and why it's important. And then kind of zooming out a little bit to some of the names. You have Boeing versus GE here, and again, Boeing has just been absolutely bombed out, as has GE. They picked up a little bit of late. Again, is this bottom fishing, valuations, historicals, all the stuff that you don't really care much about, but like money's got to find a home somewhere. And we know that estimates have been coming down, let's say in these two names for over a year, and they just started happening in mega cap tech. So again, it's getting a little crowded for your liking, it sounds like.
Right. And so that it's like the air in the balloon. It goes from one end to the other. And so the point of first showing you this comparative chart with some nice Halloween colors, by the way, right? Orange and black, is this. Do they have anything to do with one another? One could say, sure they do. Well, they're heavy industrials. They're both pretty debt laden, but they shouldn't correlate like that. It's because it's not about whether you fly planes or make turbines for planes. It's that money's moving out of Apple and it's trying to find a place to go. But the money has already gone there to some extent. Look at these moves. Maybe we can look at them individually. My thinking is that more often than not, when you overshoot the 150 moving average, you'll check back to it before ultimately resuming uptrend. So these shots over the 150-day are likely to abate, and you're likely to pull back. Now, to be fair, and it's important to say this, does GE make a new low in October? No, it holds above the June low, whereas the S&P did not. Look at Boeing, same circumstance. Boeing does not make a new low in October, and it's also above the 150 days. So can they ultimately develop into bearish to bullish reversals, proper bottoms? Yes, but here and now, they're steep moves to difficult levels.
Yeah, and so I guess if you saw a check back holding the 150-day moving average and you felt a bit better about the macro, these are names that you'd want to play for at that point for potentially a breakout of that resistance, those kind of double tops that we saw recently. Okay, that makes some perfect sense. All right, before we get out of here, Carter, let's hit Guy's favorite, gold, and then let's look at a little crypto. We haven't done crypto in a while, have we, Guy?
No, because it hasn't moved in a while.
Well, Carter's going to spec that one out, but I know that he catches your attention when he starts talking about gold. Give it to us, Carter. What are you thinking here?
So that's pretty, not to say a simple chart. It's very clear. There are two colors. There are you have a downtrend that's elemental, and the red line depicts it, and you have something that, most importantly, the sequence looks to be changing. If you're in a downtrend, you continue, you make new lows. Notice how when it hit the downtrend line on the rally in September, it failed, yes, to the penny. But when it comes back down, it doesn't make a new low. And now we're back at that line again. We have a minor triple bottom. That's what curing and healing looks like. Can it qualify? Does it qualify officially as a bearish to bullish reversal? No way, it's too early. But I think we jump the gun here and make the bet. Green arrow drawn for a reason.
All right, Guy, where are you on gold here? I know that you would like it to work.
Couldn't have been more wrong for so long, but those bottoms at least have held. And if we can get above this trend line, maybe we can get a bounce up to 1750 or so. But in order for this to be meaningful and meaningful, like we're in the next leg higher potentially, we got to get a close above 1850, 1900, and we are light years away from that. So I like this. I think the setup is, if you really want to play it, you wait for a break in the trend line to the upside, and then you buy it on strength. Is somewhat counterintuitive as that sounds. So I'd like to buy this on the way up instead of the way down.
Okay. All right, Carter, what are you thinking a little bit here? So you've actually been really active in Bitcoin. Oh, when I say really active, not particularly. You've had a couple big calls this year directionally, and you gotten them right here. And it seems like you think both Bitcoin and Ethereum seem to be at a little bit of an inflection point after, as to Guy's point, a long period of just kind of going sideways.
Right. So this is a reversal. We've basically been on the short side here, and I don't think that's right anymore, but let's look. That doesn't tell us much as depicted, but what it does show is that we didn't and haven't breached the June low. That was my thinking we would, but the more time we spend here, it looks like not only is it not going to breach the low, it's going to put on a turn. So let's put some other lines in here. Look at that. Now that's the downtrend. And if you put them all together, the question is this basing and bottoming? It has that look. Now, I think we've got other iterations. Let's just keep going. Now, the 150 moving average has not turned. And so That's what, by my work, defines a reversal, right? A bearish to bullish reversal. So to put this in context, though, take a look at Ethereum, and let's do the same thing. Put in some lines. It's above the line, and 150 moving average. Not only is it above, it is actually mathematically flat right now. So this is what a turn looks like, and I don't think it's right to be short Bitcoin. And I would basically, of the two, I'd rather be long Ethereum.
Yeah. Okay.
Hey, Dan,
that makes,
I know we're getting out of here, but since we can, this is live.
It is
I mean,
live.
you know, it's trading like absolute garbage, and now the haters are going to come at me. Apple right now is trading 136.5 to Carter's point at the top of the show, which is miserable.
Yeah.
So for all you folks out there that say, you know, you own Apple, don't trade it, I would submit this following chart, Dan Nathan.
Well, all right. Here's two things I just want to give like viewers, because we are live here. You know, this week I bought some Google, I bought some Meta last week, I bought some Amazon early this week. I've been long some Snap. I added to that. I do like the idea of playing some of those for a quick bounce over the next week or two. But I will tell you this, Guy, to your point about Apple, and when I'm looking around and I'm looking at some of these SaaS names getting absolutely killed. Snowflake's down 11.5%. HashiCorp is down 10%. Gitlab, I know you don't care much about these names. Smart contracts down 11%. Twilio down 35%. It's just today, people. Atlas on down 30%. There's some real nasty business going on in tech. I just bought some QQQ puts as a hedge, okay, against some of those tech names, and I bought for next week's expiration. And here's the thing, people. That's a tough road to hoe. When the market closed at 4 o'clock, those puts that I bought that expired a week, they got 2 days of decay here. So again, we're living in fast markets, and I'm just kind of updating a little bit. We have the benefit of talking every day. We're doing this stuff on Market Call every day. So we'll keep updating. The other thing is, Guy, a couple weeks ago, you and I were in agreement on China. I bought some FXI calls, the December 22s. They're nearly a double or a little more than a double. So I am taking some of that off and might be off of that. So you had a great call in there. I followed your lead. So just giving an update also on the UUP, that's starting to work. I don't know why it's starting to work. Maybe it's the China stuff. But again, long puts in December on that one. And I just love for yields just to test that uptrend again. 10-year below 4%, that we got a trade going. All right,
Tell Jacob to put up the OIH chart real quick in case you want to see something that's really interesting. We're getting up against the levels we saw in the spring. So I think the bulls I think the bulls are trying to step it up here, but in order to really get this thing going, you need a close above 315. And we are close to it right now, Dan Nathan. So keep an eye on that one, suckers.
All right, man. Well, listen, Carter Braxton-Worth was on Fast Money on Tuesday saying XLE. He thinks it's a fade. I think both OIH and XLE are both fades here. I'm not playing for a breakout. So, okay, I think we did a lot here. Carter, we really appreciate you joining us on a Friday morning here. We hope that you and yours have a great weekend. Guy, you want to take us out here, pal?
Yeah, remember, because, I still have clocks you got to set backwards and forwards.
Oh, yeah.
This weekend, what did I just do there, Dan?
Fall back.
Yeah, I fell back. So fall back. You get an hour. Means it's dark all the frickin' time. But that's it. That's it. I want to thank FactSet. I mean, they indulge me. I appreciate that. But they are great sponsors. And if you like this video, leave a comment. Go to the YouTube. Subscribe to Risk Reversal Media. By the way, our podcast dropped this morning, as you mentioned. Porter, Vinny, Danny, you, me. It was a fricassee, as they say. Leave comments. Leave whatever. It's at your favorite podcast store. We'll see you 1 o'clock on Monday. This same Carter Worth you just saw, he'll be back. Later, peeps.